What is going on, ladies and gentlemen? Hope everyone banked today. I'm not a financial advisor. This is not financial advice. If you want to join my live streams, we had a banger week, beautiful week live streaming. So if you want to join my Discord, just click the link in the description, the WAP link, and make sure your Discord and Patreon or Discord and WAP are connected, and you can get access to my live streams every day. So what a week, okay? I think this afternoon was just worse than price actions of all week for sure. The number one thing I've been calling this week is daily sell side and NQ, okay? And I'm going to go over why, okay? So if I go in the replay mode, I always talk about order flow, okay? And if we woke up and the candle looked like this, what would you be thinking? You would be thinking, well, this is kind of 50-50, right? Because we're in between a bullish fair value gap and a bearish fair value gap. Okay, but when do we know the order flow changes? The order flow changes when we get a change in the state of delivery. Okay, so we get this candle, so I'm like, okay, green candle out of a daily fair value gap, makes sense. And then this is the candle that is a change in state of delivery, okay? Because we get a nice order block here, daily order block. We get an up candle, and then we trade below this low, saying, okay, we have a change in the state of delivery. Now we have a daily NQ order block that's bearish. Okay, and at this point, you're like, okay, we're still inside the fair value gap, but you can also see we got an SMT at the top, right? If we look at the top, we have an SMT. Okay, so this is important to note. Okay, you can see an SMT basically just means that we make a higher high in ES and a lower high in NQ, which it could be flipped around, but this is how it was this time. And we got a daily order block in ES. Okay, so both of these things tell me that, okay, we have the SMT, we rejected this fair value gap right here, we rejected this fair value gap here, we have an NQ daily order block. Now this tells us, okay, this is a market maker sell model. We got the curve. Okay, so if you can see the curve, where does it complete? It completes at the last low. We get the last swing low before the pump. Okay, that's the most simplest way to explain it. So it completes right here because this is the last swing low we got before this giant up move, before when we got the S&P. So therefore, sell side would be right here. Okay, and I'm not just saying this in hindsight. All right, in my index commentary, I have a index commentary channel, and all day I've been saying, okay, I want 15,063. Let me see if I can find it. So I said this. So at first I was like, okay, if the daily candle closes like this, we should go to sell side. It's still pretty bearish. And then I said this. Okay, I said yesterday, if we closed beneath the daily fair value gap, I would be bearish, but we did not. However, we came up in London and retested the OB, so I still remain bearish if we hold below the 0.5 I marked here. Be very careful longing, because I think we dump and keep rejecting this. Okay, and I kind of had that low still in mind, just like I did up here. Okay, so knowing I said that in live time, why did I think that? Okay, two reasons. One, I saw this reject in hindsight. Okay, if we draw the fib on this order block, okay, you draw it from the low to this high. You can see I came in the chart and I'm like, okay, I see this wick up here and we were kind of down here at this time. So I was like, okay, mean threshold was pretty respected. We still have about 200 more points to go. Now I'm looking for short setups as long as this is respected. So when I do that, I go to the smaller time frame, I look for my model. Okay, my model being, I look for a bearish fair value gap or a bullish fair value gap that's inverse. So if we know mean threshold is up here, okay, and we rejected it, and I come to the chart and I'm like, okay, we rejected it. All I'm looking for is a short setup off it. So if we look a little closer, I'm going to the lower time frame. Okay, so what do I look for? I look for some sort of singular bullish fair value gap to form, which would be right here. Okay, so this was the perfect one, and I'm looking for that to be violated. We rejected here, we kind of got a decent short setup here, but it wasn't, there was no inverse. Okay, see how there's no good inverse. And then we pumped here. This time we got a nice bullish fair gap. We got a nice dump below, and now this is your inverse. Now here's a short. So this kind of shows you I'm using the higher time frame, going to the lower time frame, looking for my model, which is the inversion model, which is I want to see a singular bullish fair value gap violated, which this is a clear violation. Okay, and what was so good about this violation? Why was this a good short? It's because we violated it, never hit the internal low, and then came back up. Okay, if we violated it like this, hit the low, and then came back up, would this have been a good short? It could have still worked, but I wouldn't have taken it. Okay, so I did take the short because we left equal lows on here. We had the inverse. Okay, so that's the only reason why I took it. But if we took the low here, I probably would not have taken it, if I'm being honest. Okay, so there is your short setup, and then at that point, you take partial along the way. So like, I'm always targeting the next inefficiency. Next inefficiency would be where? Down here. Okay, if you look at this whole price action, there's no obvious inefficiency till right here. And what I do is I'll like target the low inside the inefficiency, because the low inside of a inefficiency is a very good target. Okay, and mostly they'll hit 90% of the time. So we kind of hit here. I was mostly out by here because I don't really hold it long, and this was already like 50 points for me, or 40 points, so I don't really hold it long. And then I did get a stopped runner break even, but that doesn't really mean anything. If I get a runner stop to break even, I'm just re-looking for another short because I know the bias is still bearish at this point. So now I'm looking for this fair value gap to be violated. Okay, we violate it, but we don't get any entry, unfortunately. And yeah, so there's actually no entry. But here's the thing. I was already in an SQQQ. Okay, I learned this in my live stream. I was in SQQ from over here once I saw that daily order block form. So I was in this morning. I just never really gave us an entry at the morning, the short. But we all knew in my live stream that we were going to get 15,063. Okay. The only other entry I see here is this right here, okay? Right here. Okay, why this entry? And why don't we have to trade back to the inverse here? So in this situation, like right here, okay, see how this inverse is above a newly open fair value gap that violated the inverse? If you ever have a violation of an inverse and then a fair value gap formed under, usually the fair value gap that violates the inverse, even if it's a little under the inverse, this will generally hold. So there's your second short setup. You would hold till here, and then you'd hold till this black line, 15,063 it was, which is sell side. We know this is sell side because the daily market maker sell model. Okay, so this is just a ton of lower time frame examples, kind of going over what I look for in the smart time frame. Okay, and then obviously this morning we dumped right to 15,063. I covered my SQQ shares down here. On Twitter, someone posted, they go, give me a play and I'll give you half profit. Obviously they said whoever's the most likes, I'll take whatever play. And I said QQQ puts, you're welcome, this isn't a lotto. And I said that yesterday because I knew you were going to go to the south side. So obviously that worked out nicely. I held my QQQ. But again, I think the general idea of why I've been bearish the last few days and why I thought this is because 4-hour chart looks like a sell model after having an SMT, and we were delivering from a 4-hour fair value gap. Okay, right here. And even if you don't see this in live time, it still tells you the bias after we deliver from and tells you where we should hit. And then the second thing was when we had the change in city data delivery down here where we traded underneath this low, making this a validated order block. That was the other thing that told me. And you can see we rejected mean threshold twice. Okay, the second time we rejected it, we actually took buy side here and then rejected it again. So, yeah, definitely an interesting week. Okay, I always talk about order flow. Order blocks are very good in identifying order flow. Even though we were kind of in a quote-unquote 50-50 spot here, we still kind of weren't, because once this order block is formed and we trade beneath it, that tells you this is not 50-50 anymore. This tells you the order flow is now bearish. Okay, and when this happens, that's when I'll go on the lower time frame chart. I'll look for bullish fair value gaps, and I'll look for those to be violated, and then I'm looking at short. So like next week, my outlook on next week for now is we did leave 4-hour equal lows. Okay, right here. You can see this low and this low. We left 4-hour equal lows. So I'm thinking we still go down next week. The one thing I am watching is this order block right here. Okay, as long as we stay below it, I'm still kind of bearish for the time being. Because if you really zoom out, this looks like a whole market maker sell model itself. So that's kind of the one thing I'm watching for next week. And then once we hit this, I may look for like a long out of this inverse right here. So this could be a possible turtle soup. So yeah, that's kind of my outlook for now. Appreciate everyone watching. Beautiful week. Hope you guys enjoyed the rest of your weekend. And yeah, other than that, peace out.